Hello, tax colleagues. Greetings to all of you. My name is Melissa from Halim Santoso and Associates. In this BJAC session, I would like to continue to discuss the third issue in the OECD guidance on transfer pricing implications for COVID-19 pandemic. Before we discuss further, please do give us a like, subscribe, and share our channel. Thank you in advance for your support. So today's agenda will be focusing on government assistance programs. If you would like to learn more about the first and the second chapter regarding the comparability analysis and losses and allocation of COVID-19 specific causes, please do help yourself by checking the link in our description box. So, shall we start? During the COVID-19 pandemic, government's biggest concern has been the public health and the effort to control the spread of the virus while at the same time trying to help enterprises manage their declining business activity and workers who are facing a decline in employment opportunities or unemployment and also income. Many governments have provided assistance through a variety of different job retention programs and broader financial and liquidity support. The terms and conditions of these programs need to be considered when determining the impact on related party transactions, including whether support is temporary or ongoing. What is government assistance? Government assistance is a monetary or non-monetary program where a government or other public authority provides a direct or indirect economic benefit to eligible taxpayers. Governments have also provided broader financial and liquidity supports to ensure enterprises can continue to operate through the period of reduction in business activity. Those include loan guarantees, direct financing to business on preferential terms, loan deferrals, specific grants, and tax relief. So, what are the issues? The availability, substance, duration, and take-up of these programs potentially have transfer pricing implications. Whether the government assistance is provided to a member of a multinational group directly or made available to independent parties within the market where a multinational group operates, thus affecting the behavior of enterprises engaged in potentially comparable transactions. In addition, there may be challenges in establishing the nature of government assistance received by potential comparables during COVID-19. Given the different types of government assistance programs, the practical difficulties to obtain detailed and reliable information, and the delay in data availability. In the next slide, there will be some questions that are likely to be frequently asked regarding government assistance programs that have been prepared by the OECD alongside the practical approaches. The first question: is the receipt of government assistance an economically relevant characteristic? The extent to which the receipt of government assistance is an economically relevant characteristic may vary. For example, government assistance could be in the form of wage subsidy, government debt guarantees, or short-term liquidity support. In such circumstances, those government assistances may be more economically relevant, as it may have a direct impact on controlled transactions and comparable transactions between independent parties, including their prices. There is also government assistance in the form of providing local infrastructure, which is indirectly related to controlled transactions and their compensation. This indicates that the provision may be less economically relevant. Second question: is the guidance on other local market features relevant when analyzing transfer pricing implications of government assistance? The analysis of the implications of the receipt of government assistance will need to consider the following factors. The first one: the government assistance provides a market advantage to the recipient. Second, any gain in revenues decreases in costs, reliable comparables since receiving the government assistance. Third, the benefits of government assistance in terms of the arm's length principle are passed on to the independent customers or suppliers, and the manner in which independent parties would allocate any remaining benefits between themselves. The analysis of the government assistance in the form of local market features can help provide the analysis of whether the revenues earned affect the price of controlled transactions. Third question: does the receipt of government assistance affect the price of controlled transactions? The potential effect of government assistance on controlled transaction prices will depend on the economic characteristics of the transaction and accuracy of the transaction and the comparability analysis according to the arm's length principle. This includes an analysis of how the receipt of government assistance will affect uncontrolled transaction prices. There are several aspects that need to be considered in analyzing the impact of government assistance on controlled transaction prices, including the availability, purpose, duration, and other conditions imposed by the government in providing assistance. Second, allocation of risk. And third, the level of competition and demand in the market. The analysis of the effect of government assistance on the price of controlled transaction will take into account certain things such as: first one, the allocation of the risk under the controlled transaction. Second, the impact of the pandemic on the outcome risk. Third, the linkage between the government assistance and those risks. There are things that must be avoided and given special attention after receiving government assistance, especially if the company recognizes government assistance as revenue or extraordinary revenue. These things can result in an unreasonable price in a transaction among the associated parties. Next question. Does the receipt of government assistance modify the allocation of risk in a controlled transaction? Government assistance can reduce the negative impact of a risk. For example, a party that has a credit risk may experience a loss from a transaction due to financial difficulties of their counterparty. However, the counterparty may actually be able to fulfill its obligations by utilizing government assistance. According to OECD, the provision of government assistance to related parties will not change the allocation of risk in controlled transactions for transfer pricing purposes. For example, suppose that Company W is a distributor that purchases goods from a related party manufacturer and sells the goods to third-party customers in its jurisdiction of residence. Company W assumes market risk based on transactions and will bear the consequences of that risk, especially if there is a decrease in demand due to new competitors entering the market. These consequences have occurred due to the COVID-19 pandemic. However, Company W receives government assistance in the form of a cash grant to assist the entity with the aim of supporting its fixed and operating costs. Receiving government assistance does not change Company W's contractual arrangements and does not affect the capability and performance of the company's decision-making regarding to market risk. Despite government intervention, Company W will remain competent in dealing with market risk and will continue to understand the impact of their decision related to the risk on the business. Therefore, based on facts and the circumstances, the government assistance to support Company W in overcoming financial distress due to the COVID-19 pandemic does not change the allocation of market risk. The same conclusion would apply to other risks that have been allocated evenly to distributors, such as inventory risk or credit risk. The last question. Does the receipt of government assistance affect the comparability analysis? Government assistance may influence the comparability of open market transactions or firms, which may give an impact to the way the parties price their transactions. Therefore, when conducting a comparability analysis, it is necessary to take into account the receipt of government assistance when reviewing potential comparables. Since government assistance and the specific circumstances of the COVID-19 pandemic can vary across different markets, it can also affect the comparables and the arm's length prices of uncontrolled transactions in different ways. OECD has made a good example relating to the current question. Suppose that Company A, a member of the multinational group, provides manufacturing services and receives a domestic wage subsidy under a job retention scheme offered by the government of country A. Whereas third-party manufacturer Company E in country E receives a domestic short-time work program in which employees' non-working hours are directly subsidized. The services provided by both Company A and Company E may be similar, but the forms of government assistance received by the two companies may result in a material difference regarding the arm's length transaction for a period which the short-time work program is in place and may not be sufficient to ensure a reliable comparison. In that case, the services provided by Company E would not be comparable for the purposes of determining the arm's length price for Company A's services unless comparability adjustments can be made. Other characteristics of the government assistance that might affect comparability depend on the circumstances, which include the duration of the assistance program and the connection between the assistance provided and the pandemic-related costs or lost revenue. Moreover, in identifying reliable comparators, it can be done by referring to uncontrolled transaction data that can be compared in the same geographic market, or can be compared between independent companies that perform similar functions, assume similar risk, and use similar assets. In this slide, I will explain the accounting treatment towards government assistance that has been provided by OECD. According to them, when applying the resale price method, cost plus method, or TNMM, the accounting treatment of the government assistance in both tested and comparable parties may need to be specifically identified, particularly when tested party and comparables apply different accounting standards. For example, the government assistance can be deducted from costs according to accounting standards, or it can be presented separately. In addition, the accounting treatment with different accounting standards towards government subsidies can affect gross profit, operating profit, net income, etc. If the accounting treatments of the same type of assistance differ between the tested party and a comparable, a comparability adjustment may be required. Additionally, different accounting treatments may happen depending on the type of government assistance provided. For example, the accounting treatment of conditional loan is different from the accounting treatment of an outright grant. Such a difference could affect comparability and might be more difficult to adjust than the simple accounting differences. As for the conclusion, Chapter 3 of the COVID-19 guidance is dedicated to the impact of public and government assistance on transfer pricing, the impact of assistance on the comparability criteria, and risk allocation between the parties to the transaction. The OECD notes that the extent to which government grants are economically relevant and the characteristics may vary. Attention should be given to the competitiveness and price elasticity of the relevant market when determining whether a related party would be able to retain such government assistance, as they would typically influence the behavior of third parties to retain benefits from such government assistance. This is the end of the discussion of transfer pricing guidance on government assistance programs. Thank you for your time, and see you in the next video for the next issue regarding advanced pricing agreements.